Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PROCTER Gamble Co. quarterly report. The Procter & Gamble Company offers a wide range of consumer packaged goods across various segments. Some of the key businesses and services provided by the company include beauty products, Head & Shoulders herbal essences, Pantene, Rejoice, Ale Eskai grooming products, Braun, Gillette, Venus Health Care products, Metamucil, Neurobion, Pepto-Bismol, Vicks Fabric and Home Care products, Ariel, Downy, Gain, Tide, Cascade, Dawn, Fairy, Febreze, Mr. Clean, Swiffer Baby and Family Care products, Love's, Pampers, Always, Tampax paper products, Bounty, Charmin, Puffs. These products are sold through various channels including mass merchandisers, e-commerce, grocery stores, specialty beauty stores, and professional channels. Procter & Gamble Co. stock price decline. A year in review. In the past year, Procter & Gamble Co.'s (PG) stock price has experienced a decline of -7.55%, with its value falling by 9.52% over the last 12 months as of October 24, 2025. Several factors contributed to this downward trend. The company's cut in full-year outlook and missed Q3 results in April 2025 led to a 2% drop in shares. This was attributed to challenging market conditions and trade tensions. Additionally, Procter & Gamble's stock hit a 20-month low on October 9, 2025, with the preceding 12 months seeing an 11.59% decrease. Insider selling activity also played a role, with key executives such as John R. Moeller and Andre Schulten selling shares in the 6 months leading up to this period. While positive news like strong fiscal cone 2026 earnings reported on October 24, 2025, caused the stock to rise temporarily, the overall performance for the past year reflects the impact of these negative factors and market conditions. The primary drivers of revenue growth or decline for a given company can be attributed to its various business segments. The beauty segment is the main contributor to revenue growth, with an increase of +8.5% in net sales. In contrast, the healthcare and fabric and home care segments are experiencing declines of -2.3% and -1.7%, respectively. The grooming segment also shows a modest growth rate of +5.6%. However, the baby, feminine and family care segment is experiencing a slight decline of -0.9%. These variations in growth rates across different segments highlight the importance of analyzing each business unit separately to understand revenue trends. Net income and profit margins. A shift in performance. The company's net income experienced a significant surge from $3.987 billion in Q3 2024 to $4.781 billion in Q3 2025, marking a 20% increase. This growth can be attributed to an increase in net sales by 3%, reaching $22.4 billion. However, the profit margins tell a different story. The operating profit margin declined from 26.6% in Q3 2024 to 21.6% in Q3 2025, while the net profit margin rose from 18.2% to 21.4%. This discrepancy can be attributed to higher restructuring charges and decreased gross profit margins due to increased costs of goods sold and lower selling prices. The decrease in operating expenses as a percentage of net sales contributed to the increase in operating profit margins, but was not enough to offset the decline in gross profit margins. Overall, the company's performance indicates a mixed trend, with net income rising while profit margins experience fluctuations. The company's financial performance has shown a significant improvement in its operating cash flow. With an increase of 10% to $5.6 billion, it is clear that the company is generating substantial and growing amounts of positive operating cash flow. This trend suggests a strong ability to manage its finances effectively and generate sufficient funds from its core operations. The company's financial summary reveals a notable decrease in its long-term debt and interest expenses. Specifically, the long-term debt decreased by $680 million, from $24,995 million to $24,315 million. Additionally, the interest expense saw a significant reduction of $41 million, dropping from $238 million to $197 million. These changes indicate a positive trend for the company's financial health, suggesting that it has successfully managed its debt and reduced its interest expenses. The performance review of Procter & Gamble's segments and regions. Procter & Gamble's financial summary reveals a mixed performance across various segments and regions. The beauty segment stood out with a 7% increase in net sales, driven by strong growth in hair care and skin care products. The grooming segment also performed well, albeit at a slower pace of 2%, due to growth in men's grooming products. The baby, feminine, and family care segment saw a 4% rise in net sales, primarily fueled by baby care and feminine hygiene product sales. Conversely, the fabric and home care segment struggled with a 1% decline in net sales, attributed to a decrease in laundry detergent sales. In terms of regions, Argentina was a notable underperformer, with P&G opting to liquidate its operations as part of its restructuring program. The healthcare segment's performance was lackluster, with only low single-digit growth in net sales. Overall, while some segments and markets excelled, others faced challenges that will require attention from the company moving forward. Management's outlook. A cautionary note with optimism. Procter & Gamble's P&G management has issued a cautionary note regarding the company's quarterly results for 2025, stating that they may not be indicative of annual outcomes. Despite this warning, P&G's 5 business segments have shown net sales increases in beauty, grooming, and baby, feminine, and family care segments. Management is aware of various economic and market risks that could impact the company's performance, including global economic conditions, foreign exchange fluctuations, and government policies. To mitigate these risks, P&G is implementing a restructuring program, which includes liquidating operations in certain markets. The company has reaffirmed its full-year guidance for earnings per share, EPS, of $6.25–$7.55, and operating cash flow of $15–$17 billion. While management's outlook is cautious, the company's financial performance and growth prospects remain optimistic. The acquisitions and divestitures of Procter & Gamble, P&G, are notable for their lack of significant activity. While there is no clear mention of acquisitions in key pages, P&G has made a substantial liquidation of operations in certain enterprise markets, including Argentina. This move is expected to result in an after-tax gain due to the sale of its minority interest in the Glad joint venture. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, totaling $2,549 million in 2025 and $2,445 million in 2024. Additionally, the company has engaged in substantial share repurchases, acquiring approximately 10.8 million shares worth $1.7 billion during a single quarter. Furthermore, the company has announced plans to reduce its outstanding shares through direct buybacks valued at around $5 billion in fiscal year 2026. That concludes the financial summary for PROCTER and Gamble Co. Feel free to comment below, and I will be happy to answer them when possible.